You are listening to The Vocal Technologist. Spoken Tech for your ears.
Welcome, everyone. Today, we are really getting into the weeds on fintech and commerce, looking at some fascinating shifts happening right now. We've got a bunch of recent reports and news, and the idea is basically to pull out the key things you need to know about how money and buying stuff is changing. And let's just jump right in with something pretty wild. OpenAI is apparently building its own payment checkout right inside ChatGPT. I mean, think about that. The AI goes from just, chatting to actually handling the purchase. Let's try and unpack that a bit. When you hear that, OpenAI building native payments, what's the immediate, the biggest thing that jumps out at you for how we'll interact with money soon?
Yeah, it's a huge signal. What's really fascinating is how it connects to this broader concept people are calling agentic commerce. The idea is your AI agent doesn't just find stuff for you. It handles the whole process. Discovery, purchase, payment, all of it.
So you wouldn't even see a checkout button, potentially.
Potentially, yes. Or it becomes completely invisible, frictionless. It suggests this move away from distinct apps towards something more like liquid software. Think of apps just sort of melting into the background, and the AI brings forward what you need when you need it. No need to open 10 different things.
Wow.
And it signals a massive shift for businesses, too. Forget just SEO, search engine optimization. New game might be AEO, agent experience optimization. How do you make sure the AI finds and likes your product enough to recommend it or even buy it? It's a whole new ballgame.
That's a mind bender. Okay, so AI is changing that front-end experience, maybe making checkouts invisible. What about the plumbing, the actual money movement? We saw Stripe just bought Orum, that real-time payment startup. Why is that significant now?
Right, that acquisition ties into this perfectly. It's all about speed and efficiency behind the scenes. Orum's tech uses machine learning AI, again, actually to smartly figure out the fastest way to send money. So it looks at options like ACH, a standard bank transfer that takes days, but also RTP, real-time payments.
Which is basically instant, right?
Pretty much, yeah. Seconds, not days. So Stripe buying them really underscores this huge industry push to make money move faster, more smoothly, less waiting around.
Okay, so we've got AI driving potentially invisible payments on one side and the money itself moving at warp speed on the other. At the same time, the fintech market itself seems to be, maturing, growing up. We saw Block, Jack Dorsey's company, join the S&P 500. That feels pretty significant, doesn't it? Like fintech getting a proper seat at the grown-ups table in traditional finance. But then, just as that happens, we hear JP Morgan Chase is starting to charge fintechs for access to customer bank data. That feels like a curveball.
It absolutely is, and it raises some really important questions, especially for the smaller fintech players out there. That data access used to be, often free. It was foundational for a lot of budgeting apps, financial planning tools.
So this could really squeeze them.
It could. It's a big cost shift, and it shows the established banks maybe flexing their muscles a bit more, asserting control over that data infrastructure. It might mean some free services you use could start charging. Or maybe accessing your own financial data picture becomes more fragmented again. And it's interesting to contrast that external pressure with what banks like Bank of America are doing internally with AI. They're reporting huge productivity boosts. Something like 98% of their employees are using internal AI tools. They've got over 700 AI applications running.
So while they're making it potentially harder for external fintechs, they're doubling down on AI for themselves.
Exactly. They're using it to get super efficient behind their own walls.
Right, and all these shifts, the tech, the market dynamics inevitably bring in the regulators. We saw something on the crypto front recently, didn't we? President Trump signed the Genius Act. What's the quick takeaway there for people using digital money?
Yeah, the Genius Act is focused specifically on what they call payment stablecoins. These are the cryptos designed to hold a steady value, often pegged to the dollar, so they're more practical for, actual payments.
Less volatility.
Right. The Act sets up a new licensing system, sort of a dual federal and state framework for overseeing them. It's not immediate, expected around November 2026, but it's laying the groundwork for potentially more regulated, maybe more mainstream use of stablecoins down the line.
Okay, so putting it all together, AI changing how we buy things, faster payments, established players, shifting tactics, new regulations coming in. It's a lot. It really feels like the ground is shifting under our feet in the financial world. So maybe the thought to leave you with today is this. How do you see these changes hitting your wallet, your shopping habits, your banking, maybe in the next couple of years? What opportunities or even what new hurdles do you see coming out of all this? Something to think about. We'll definitely keep exploring it here.
Spoken Tech for your ears.